The world is moving toward a carbon-free future with electric vehicles, renewable energy, and battery storage systems. What many people don't realize is that this green transition requires massive amounts of metals. We're talking billions of tons of nickel, copper, cobalt, and manganese. Traditionally, we extract these metals by digging deeper and deeper, clearing rainforests and generating toxic waste. But there's an alternative. Instead of destroying forests, some companies are exploring the ocean floor. This video breaks down a company pursuing this unconventional approach. Not because success is guaranteed, but because understanding this strategy matters for anyone interested in the energy transition. It's critical to emphasize that this content is purely educational and not financial advice. Everyone needs to do their own research based on their personal situation and risk tolerance. If you like this kind of deep dive analysis, hit the like button and subscribe. It really helps me create more content like this. Now let's dive in. The company we're analyzing today is called TMC, which stands for The Metals Company Incorporated. The ticker symbol is TMC. It trades on NASDAQ, and as of January 23, 2026, it's sitting around $9.44 per share. The concept: instead of clearing forests in Indonesia or digging in South Africa, TMC collects critical metals from the ocean floor. They're targeting polymetallic nodules in the Clarion-Clipperton Zone in the Pacific, which contain four essential metals: nickel for EV batteries and turbines, copper for electrical infrastructure, cobalt for battery energy density, manganese for steel production, and next-generation battery chemistry. This approach avoids deforestation, open-pit mining, and the massive toxic waste from land-based extraction. The company's vision goes beyond just extraction. They're aiming to create a circular system where metals get reused indefinitely, with a complete transition to recycling within 3 to 4 decades. Financially, TMC has about $121 million in cash and roughly $165 million in total liquidity, including unused credit facilities as of Q3 2025. The company is currently pre-revenue since they haven't sold any nodules yet, which means investors are betting on future production rather than current profits. The net loss of $184.5 million in Q3 2025 is primarily driven by non-recurring items like stock-based compensation and fair value changes in royalty liabilities and warrants, while actual operating expenses include $9.6 million for exploration and $11.5 million in cash used during the quarter. The company states that its current cash will be sufficient to cover working capital needs for at least the next 12 months, meaning they won't need to immediately dilute existing shareholders. A major development happened in January 2026 when TMC's U.S. subsidiary filed a consolidated permit application with NOAA covering 65,000 square kilometers for commercial operations, benefiting from new modernized rules that streamline the permitting process. This regulatory progress is significant because copper was added to the Department of the Interior's critical minerals list in November 2025, which means all four metals in the nodules are now officially recognized as essential to national security and U.S. economic interests. The company maintains its goal of beginning commercial production by late 2027 if they secure the necessary permits, and they've already demonstrated technical capability by successfully producing battery-grade manganese sulfate from nodules during trials in October 2025. Economic studies published in August 2025 show a net present value of $5.5 billion for the NORI-D project and a combined value of $23.6 billion across all their zones, with a world-first declaration of 51 million tons of probable mineral reserves. The market has reacted very positively. The stock jumped 39% in January 2026 alone, bringing the market cap to approximately $3.9 billion, while the stock is up roughly 500% over the past 52 weeks and 53% year-to-date in 2026. These figures illustrate the extreme volatility of this stock and represent historical observations only. They guarantee absolutely nothing about future results. The market currently views TMC as a double-edged opportunity. On one side, you have a company with no revenue attempting something that's never been done at commercial scale. On the other, you have a potentially massive resource of metals the world desperately needs for the energy transition. The risks include the possibility that the International Seabed Authority or certain countries oppose the project, that permits get denied or delayed indefinitely, that development requires more capital leading to dilution, that the technology encounters unexpected challenges at scale, that metal prices crash and radically change the project economics, or that environmental opposition blocks permits despite scientific studies. The timeline to expected production in late 2027 represents nearly 2 years during which a lot can change, making this investment completely unsuitable for conservative investors or those who need their money in the short term. However, positive scenarios include NOAA approval validating the entire regulatory framework, being a pioneer creating significant competitive advantages in regulatory expertise and proven technology, strategic interest from the U.S. and its allies in securing domestic sources of critical minerals, potentially attracting partnerships and government support, and long-term structural demand since the International Energy Agency estimates we'll need exponentially higher quantities of these metals. Korea Zinc's investment in 2025 signals that established players see real potential in this approach, and if environmental studies demonstrate that nodule collection truly has less impact than land-based mining, it could transform public and regulatory opinion in favor of the project. TMC is pursuing a pioneering approach to ocean nodule collection to supply critical battery metals, currently advancing through U.S. regulatory approvals with promising economic studies despite having no revenue. The spectacular stock volatility with a 500% gain over the year reflects a speculative opportunity that requires simultaneously believing in technical viability, regulatory approval, project economics, and global urgency for these metals, while accepting the very real risk of significant losses. This opportunity deserves serious analysis because the science is solid, regulatory progress is tangible, the need for these metals is undeniable, and the stock performance reveals real market interest. This is a high-risk proposition with potential for significant gains or major losses, which demands that every investor do their own research, follow the NOAA process, monitor metal prices, and honestly assess their risk tolerance before investing only amounts they can afford to lose.